Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A bullish engulfing pattern on Friday after the previous session's long-legged indecisive spinning top. It was also the highest close since July 2022. Prices opened around stratified congestion, mainly from 2014 at 106.79 and 107.46. Dropped down to just under the August 22 high at 105.49 before rallying higher up through the congestion between 108.27 to 108.62, as well as congestion at 110.68. But stopping short of the dark blue neckline extension, which is currently 113.89 of the July to November 2023 head and shoulders top. Now further down is the congestion from August 2014 between 101.55 up to the September 2014 high at 103.34, containing the extension to the bright pink neckline, currently 103.19, of the March to April 2024 head and shoulders top. Whilst beyond the dark blue neckline extension above is a band of congestion between 115.70 to 117.31, consisting of basically a high at 115.70, which I think is, all the way up through to the September 2013 high at 116.53 and the August 2013 high at 117.31. It's the September 2023, September 2013 high, and also the high at 115.70 is from 2014. However, I still think the most important piece is still higher. It is the bright red middle time, which is currently 120.10 of the big 2020 to 2025 bullish shift pitchfork. This bright red time is located just above a significant congestion area between 119.19 to 119.99. It's not very easy to say that. So 119.19 to 119.99. So far today, another post-weekend gapping move higher, testing the dark blue neckline above, but it's been since filled in, with prices dropping down to congestion at 110.68, before moving back up again to just underneath that dark blue neckline again. Spot gold, a bearish closing long black Mariposa and third bearish black crow on Friday. Prices tried up to the 50% Fibonacci line of the October 25 to January 26 move, where at 47.41, where they peaked before dropping lower, down through what was the strong combination of the 50% Fibonacci line of the late October 25 to late January 26 move at 46.03, the now flatlining mauve medium moving average, currently at 46.09, and the previously untested lower time, currently 46.08, of what I had hoped might be a significant late December 25 to early February 26 bullish shift pitchfork. It was, as I said last week, and I quote, "I'm now starting to have doubts about this pattern, though I do note the medium moving average is reinforcing the lower time. But then again, if you are planning to break lower, it would be easier to expend your energy against one level rather than ration it for two separate levels. Something to think about." End of quote. The push lower must have turned out the bearish incentive quite a bit, as we ended up closing within a fairly free zone, with the next support below being the Fibonacci congestion between 44.03 to 44.35, consisting of a pair of close together 50% Fibonacci lines of the May 25 to January 26 move at 44.20 and the October 25 to January 26 move at 44.35. This was a significant close, below the combination of the lower time, the mauve medium moving average, and the 50% Fibonacci line. Now, I had previously briefly highlighted how the break below the early February to mid-March small bull channel, currently at 52.80 to 56.84, gave us a primary target X in the 49.60 zone, a secondary hard to reach target X1 down in the 48.95 zone, and a tertiary much harder to reach target X2 down in the 47.35 zone. Well, targets X1 and X and X1 were reached last Wednesday, and target X2 was reached last Thursday. Now, so far today, a test up to the lesser Fibonacci line at 45.39 before a strong move lower, down through the previously discussed congestion between 44.03 to 44.35, as well as the late December 25 low at 42.74, plus lesser Fibonacci lines at 41.62 and 41.42, and finally halting, unsurprisingly, at the combination of the slowly rising gold long moving average, currently 40.97, and the bright red lower time, currently 41.12, of the newly drawn bright red and bearish late January to late February bearish shift pitchfork, as well as the lesser Fibonacci line at 41.04. Of these three, the gold long moving average and then the bright red lower time are the most important, and in that order. Since the drop, the market has bounced up to just over the December 25 low. Finally, we are set up and possibly may have triggered a really big January to March double top pattern, an Adam and Eve type. The trigger could be a close under 44.03, which we have pierced but not as yet closed under, so caution and watch out today. Bitcoin. A second bearish black crow on Sunday after the previous session's reactionary bearish black crow to the earlier bullish harami. The market continues its decline from the earlier pierced, though still effective, dark blue upper bull channel line, currently at 75.635. Of the key and overall pattern here, the dark blue early February to date bull channel, and that's currently 66.282 to 75.635. Prices were capped this time from the open, more or less, by the November 21 high at 68.977, and dropped down through the next support, the October 21 high at 67.058, and finished up at the market attractor of the bright red neckline, currently at 67.955, of the August 21 to January 22 head and shoulders top. This neckline saw the market rotating around it throughout most of February. And into the middle of March. And now, well, it may be starting to do that again. Well, we shall see. Looking below, we have the important dark blue lower bull channel line, and a little underneath this, the important 50% absolute Fibonacci line at 63.129. Now, going back to the dark blue bull channel, this pattern continues to raise the question as to whether this is a potential halfway hesitation, and quite a big one if it is, for a much lower market, or a potential basing action for higher prices. Now finally, we still have in the bigger picture, just about hanging on, a very large October 25 to date bearish halfway hesitation. The primary and secondary targets for this pattern have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. I was on the verge of retiring this target unless, and I quote, unless we see some strong and distinct moves lower very soon, end of quote. Well, we might very well be seeing the start of something now, but it's still early. So far today, well, not much. Between the overhead November 21 high and the October 21 high below, and rotating around that bright red neckline extension looking like an indecisive doji cross at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.